This is Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin. I'm joined by Ann Logue. She's a consulting analyst as well as the author of Day Trading for Dummies. Annie, thank you so much for joining us on the show today.
You're well. Yes, it's early. You're welcome. Thank you so much for having me.
Absolutely. Well, just to get things started, what's your take on the overall market right now? Just what are you seeing in finance land?
I think it's really nervous right now because the market
Mm-hmm.
itself has been so strong for a while. It hasn't. It's so strong for the past few years in the face of a lot of really weird news around the world. And the economy has been recovering, but it has not been quite as strong as everyone would like. So I think that makes different names, different stocks, really vulnerable to news. If the slightest bad news comes out, I think people are looking for an excuse to take a name down. Now, for the opportunity for a trader is that bad news creates volatility, and volatility creates lots of entry and exit points. But I think that that's what we're looking at, that in the last year we've seen major problems in China, major problems in Europe, major problems in the Middle East, that the U.S. economy is okay but not great. And, you see, like yesterday, there was the news about Gap. Gap posted disappointing same-store sales and been killed because all of a sudden people had an excuse to get out. We haven't had big excuses to get out for the overall U.S. market, but people are looking for them.
Yeah, absolutely. You had mentioned wanting to talk about some shareholder activism. So what's popping up on your radar for that?
Well, what's interesting, the Wall Street Journal had a big report on it on Monday, and it's what they looked at is that it has usually been successful. That when activist investors find a company that is ailing, that they tend to do a really good job of forcing improvements in governance. That there have been some exceptions where it has failed, and two of the better examples would be J.C. Penney, where Bill Ackman
Mm-hmm.
came on and didn't turn the company around. Somewhat amazing to me that the company did finally turn around once they returned to its retail roots. The other business that has been somewhat interesting or that has been less successful would be Herbalife, where Bill Ackman, again, has been trying to force the company to change its business practices and or go out of business, and that hasn't happened either. So, but for the most part, a lot of the companies, there's things that happen. When you look at, they did a big profile of Forest Laboratories, which had an 83-year-old CEO. He was, having some trouble keeping up. He had no management succession plan and was in this extremely competitive pharmaceutical industry. And the activists orchestrated an improved board of directors and a new CEO and a merger plan that ended up being good for the shareholders and also was able to do it without creating a lot of excessive internal turmoil or stress. One of the things that people worry about with activist investors is that they're going to come in and fire everybody, and then the company's still going to go bankrupt. And so that was a case that was reasonably successful. And the overall report is just that when people are making noise about companies underperforming, they're usually right. And that management can get stuck in a lot of myopia. That management can really get into this idea where they're working for their own compensation and their own glory and not necessarily delivering results for shareholders. And then, of course, when an activist comes in, that creates the kind of volatility and news flow that's very good for a short-term trader. because short-term traders don't necessarily care about whether or not the business fails or succeeds. It's more about how much news flow you have so that you have those entry and exit points. So, and I think, I've written about socially responsible investing before, and shareholder activism, that's done properly, is a really good way of forcing companies to be more accountable to customers and shareholders and employees. So I think it's interesting, and I think, again, when you're looking at a market that is overvalued, you're going to see a lot more cases of companies missing results and then getting killed, and then you're going to see, in some of those cases, people looking for problems that can be solved, and then you get the news flow.
So are there any shareholder activist positions that stick out to you right now that are looking particularly positive or particularly negative? I know we talked about Herbalife already, but what else in that space kind of sticks out to you?
Two that are interesting and that are tied to this idea of some economic uncertainty. One is Jarden Restaurants, which is the parent company of several chain restaurants, most notably Olive Garden, and there is some disagreement within the activist group and the board of directors about how best to go about changing it up. There was a lot of news headlines about, wanting Olive Garden to serve smaller portions and, changing the Olive Garden menu. There's been talk about selling or spinning off Red Lobster. But that's a situation where some of the restaurants in that chain are pretty high-end, like Capital Grille, so there's a lot of economic sensitivity. And even a restaurant like Olive Garden, which has a lower price point, that has economic sensitivity because if people aren't working, they don't go out, period, right? Even if they know that they're going to get enough food for 3 days' meals there. So I think that's one where there's some economic uncertainty and there's some news flow as the investor group figures out what they might be able to do or might not be able to do to turn the company around. Another one that's interesting is Ethan Allen, ETH. That is the furniture company. And there again, furniture is very economically sensitive in that it's a discretionary purchase. It can be put off for years. There are plenty of people who've never bought new furniture, furnished their entire houses with hand-me-downs or, thrift shop and alley finds. And so if you have some concern about economic recovery, that means there'll be some concern about people's willingness to spend for high-end furniture. And there's also a lot of back and forth about what the direction of the company should be, about what kinds of competition it has and how it should be reaching customers. And so then you have the same thing. You've got news flow, you've got uncertainty, and that makes for entry and exit points, even if you're not necessarily paying attention to how it does over the long term. And, over the long term, it is a tougher call because there are uncertainties about, whether or not people want to buy that kind of furniture, whether or not they have the wherewithal to buy that kind of furniture in a situation where we have an economic recovery that is almost, but not quite happening, which I think has been frustrating, but that's the situation. Another stock, another retailer that I think will have a lot of news flow on, especially in the next 2 months, is Aeropostale, ARO, which is a teenager, targets your high school students. And it has been struggling for a long, long time.
Oh, yeah.
And that means it's really hitting this make or break point about are they going to be able to continue after the January clearance sales, or will the January clearance sales be its liquidation? So There's even concern about whether or not it's going to be able to stay as a listed company. So that makes for trading opportunities. And retailers in general, especially as we head into this time of year, become very good for traders because there's so much news flow about the December holiday sales season. So, you get into regular reports of mall traffic and what's happening with the economy and, which sales weekends are the best. And so I think for an investor, there's some risk there because I'm not sure if they were to file Chapter 11, I'm not sure what assets would be there to liquidate. I don't think their brand is particularly strong. I don't think that there's any designs they have that are particularly great or any, real estate that people would really want. So when they go under, if they go under, it will be fast. But in the meantime,
Yeah.
As everybody waits for that holiday miracle, there's a lot of news and a lot of not good things to watch.
So
Things to watch
yeah.
there.
Chris in our chat room here has got an interesting question. He's saying when banks approve independent loans for restaurants, they often survey the parking lot to see how full it is over a couple weeks.
Uh-huh.
And he's like, I think there's an industry-wide survey for this same kind of anecdotal information, and I think that could probably apply to restaurants or any sort of brick and mortar stop. He wants to know if you have access to or use any kind of standardized parking lot references or information reports.
Oh, I know people do that, but I don't know if there's any standards.
Sure.
My guess is it would be there's a company called Technomics that does a lot of restaurant industry research, but my guess is that they charge a lot of money for that.
Mm-hmm.
As far as I know, there's no regular public release of that data. I know that financial analysts tend to do a lot of that anecdotally, but then you get into problems about whether or not the stores they've looked, how typical are the stores that they actually went to look at. If you were a New York analyst and you went to the Times Square Olive Garden, you might have a very different view of Olive Garden demand than if you went to an Olive Garden in Flint, Michigan,
Mm-hmm.
So, I know it exists. I know that it's done in the real estate business, but as far as I know, it is expensive and not released to the public.
Mm-hmm. Okay. You had also mentioned talking about American Apparel. This has been a pretty interesting story. This is with is it Dov Charney was the CEO?
Yeah.
Yeah, he's an interesting guy.
Oh yeah.
So what are you seeing in American Apparel right now?
Well, that's they are officially in Chapter 11. There's a lot of talk about somebody coming to take it over. It is definitely in that penny stock territory where small moves are big percentages. And I think the real question is how much will be left over for shareholders at 11 cents. If you are feeling lucky, it is an interesting one to look at. But there is a brand name there. There is a product that people like. They like the idea of American-made basic clothing, that there's an ongoing demand for those basics that they sell, so you don't have the same kind of fashion risk that you have with, say, an Aeropostale. But it's winding down quickly. But at 11 cents, if you day trade penny stocks, it is worth taking a look at.
We've only got a couple minutes left here with you, Annie, but we've got some questions from the chat that I do want to get to. Bobby mentioned Freeport McMoran, Carl Icahn recently getting into this one.
Yeah.
What are your thoughts on FCX? Or F-
I don't know it that well,
mm-hmm.
except that Carl Icahn does generally do good work,
Oh, yeah.
and that is a business with enough components that you could see talk about breakup and a lot of news flow.
Mm-hmm.
Beyond that, I don't know the industry that well, and so I don't want to comment too much.
For sure.
But but he does do good work. I
Oh,
mean, Bill
yeah.
Ackman has a very checkered track record right now.
Mm-hmm.
Carl Icahn less so,
Oh, yeah.
and on top of that, anytime these people are involved, that makes for news, and news is good for traders.
Yep. Yep. All right. Last
Mm-hmm.
question, Annie. From the chat, Lithuania is asking, what sector does Anne think will do best over the next 12 months?
For the next 12 months.
Mm.
I am thinking that we are going to see some.
It's a big question, yeah.
Yeah. You know what? I mean, we've got so much uncertainty with Europe, but I think that if we see some more economic recovery in the U.S., and if energy prices stay low, we could see some pretty good demand for the auto company. And
Ooh.
they are going to everybody's going to benefit from Volkswagen's problems. Volkswagen has been a
Mm.
fierce competitor. Their goal was to beat out General Motors and Toyota to become the largest automaker in the world. And they have some very serious problems right now. So I think that's good for everybody else. And I think the auto industry could be very interesting.
We've been on the line with Annie Logue. She is a consulting analyst as well as the author of Day Trading for Dummies. Annie, we didn't even get to talk about any of your other books, but that just means we will have to bring you back on again very soon. Thank you for joining us this morning, and you have a great day.
Oh, you're welcome. Thank you for having me.